So let's take a quick peek at the income statement for Tesla Incorporated. First thing to note is at the top, the heading of this statement is actually referred to as a statement of operations. That is another term for the income statement. Don't let that throw us off. It has the same elements as any income statement. It starts with revenues. And we can see that there are multiple ways that Tesla earns revenue. They sell automobiles, okay, which is what most people think about. They lease them, which they separate out. They sell solar systems or energy generation, and they provide services, typically ongoing support for those energy generation and storage systems. So their total revenues in 2020 for that year was $31 billion. All of this is in millions, so we add some zeros, specifically 6 zeros, that's 31 billion. That's significantly more than the year before. And we could look at the comparison between 2019 and 2020. That's why they're shown 3 years. And you can see consistently increasing revenues. Specifically, even more dramatically, is under automotive sales, from 17 up to almost 20 to over 26 billion in automobile sales over that 3-year period. So that's what they do to earn revenues. The cost of those automobiles that they sold was, or the cost of revenues, cost of goods sold, is 19, almost 20 billion. So that cost them to build them about just under 20 billion, and they sold them for over 26 billion. You have the same information on energy generation. You see how little they make on their solar systems. Their cost is almost 2 billion, and they're selling it for almost the same amount. So all of their, you might say, gross profit, which is the difference between sales or revenues and the cost of goods sold or cost of revenues, is almost entirely from automobiles. So then they list their expenses that are not cost of goods sold. Now, cost of goods sold or cost of revenues is an expense, but it is typically listed separately. The other operating expenses, research and development to develop new products, selling, which is where all the advertising, all of the office expenses, things to run the business, are under selling, general, and administrative. We have those 3 categories. Restructuring, okay, again, you can see what they compared with each of the last 2 years. We subtract those expenses and we get operating income. We have some other types of expenses that are not as critical to the business. Interest expense, other expenses, listing tax expense or provision for income taxes. Remember, income tax expense is kind of considered separate from the true expenses because it is actually an assessment by the government. So often, because that is assessment and because it's an estimate, we call it the provision for income taxes. That's almost $300 million. Subtract that out and we get our net income. This is what is left over of the revenues after all the expenses are covered. All right, and you see that previous 2 years, 2018, 2019, that was a negative number. There were more expenses than there was revenue. 2020 was the first year that Tesla was able to report that their revenues exceeded their expenses. So definitely going in the right direction in terms of their financial situation.